you commerce students to Exam Tips and Tricks channel. Today let's understand one more problem from the model question paper based on accounting ratios. In this question, various types of ratios have been asked. Calculation of current ratio, debt equity ratio, trade receivable turnover ratio, trade payable turnover ratio, earnings per share, dividend payout ratio. First, let's understand meaning of ratio. A ratio is a mathematical number calculated as reference to relationship of two or more numbers and can be expressed as a fraction, proportion, percentage and number of times. When the number is calculated by referring to two accounting numbers derived from the accounting statements, it is termed as accounting ratio. Ratio analysis is an important tool of financial statement analysis. It is an indispensable part of interpretation of results revealed by the financial statements. Objectives of ratio analysis: to know about the potential areas which can be improved to provide a deeper analysis of the profitability, liquidity, solvency and efficiency levels in the business, to know the areas of business which need more attention. Advantages of ratio analysis: it simplifies complex figures and established relationships. It is helpful in comparative analysis. It helps the business in identifying the problem areas as well as the bright areas of business. It enables the firm to do its own SWOT analysis, strength, weakness, opportunity, threat analysis. Limitations of ratio analysis: lack of ability to resolve problems. There is lack of standardized definitions of various concepts used in ratio analysis. Lack of universally accepted standard levels. Ratios based on unrelated figures would essentially be a meaningless exercise. It is means and not the end result. Ratios are means to an end rather than the end by itself. Types of ratios: on the basis of traditional classification, statement of profit and loss ratio, balance sheet ratios, composite ratio. On the basis of functional classification, liquidity ratios, solvency ratios, activity ratios, profitability ratios. So let's solve the problem which is given in the model question paper. Calculation of various kinds of ratios. First, calculation of current ratio. So the formula for the calculation of current ratio will be current asset divided by current liabilities. So first we will prepare current ratio. So the formula for the calculation of current ratio: current assets divided by current liabilities. So current assets, inventory, trade receivables are the current assets. The value of inventory is 1 lakh plus trade receivable is 50,000. So that will be 1,50,000. So applying the formula, current assets 1,50,000 divided by current liabilities, that is trade payables 75,000. So the value will be 2. It has to be expressed in terms of 2:1. So that is the first kind of ratio called as current ratio. Next, calculation of debt equity ratio. Debt equity ratio. So the formula for the calculation of debt equity ratio will be debt divided by equity. So debt is 13% debentures, that is considered as a debt of the firm. Equity is 70,000 equity shares of rupees 10 each, so that is 7 lakh. So 3 lakh divided by 7 lakh. So the value will be 0.42, that has to be expressed is to 1. So this is how debt equity ratio that has to be calculated. Next, calculation of trade receivable turnover ratio. So next we need to calculate trade receivable turnover ratio. The formula for the calculation of trade receivable turnover ratio will be trade receivable turnover ratio. So the formula for the calculation of trade receivable turnover ratio will be net credit revenue from operations divided by average trade receivable. So net credit revenue from operations here, cost of revenue from operations, that must be treated as net credit revenue from operations. So that is given as cost of revenue from operations given as 5 lakh divided by average trade receivable. So trade receivable value is 50,000. So average trade receivable is equal to opening trade receivable plus closing trade receivable divided by 2. Here opening and closing trade receivables is not given, so we need to consider trade receivable value, that is given as 50,000. So it has to be expressed in terms of number of times. Next, trade payable turnover ratio. The formula for the calculation of trade payable turnover ratio will be net credit purchases divided by average trade payables. Net credit purchase, that is given as 4 lakh divided by trade payables value is given here, opening trade payable, closing trade payable divided by 2, that is average trade payable, but here opening values, closing values is not given, so this value of trade payables that must be taken into consideration. 4 lakh divided by 75,000, so that will be 5.33. It has to be expressed in terms of number of times. Next, earnings per share. Earnings per share. The formula for the calculation of earnings per share will be profit available for equity shareholders divided by profit available to equity shareholders divided by number of equity shares. So profit available to equity shareholders, the value is given as 1,75,000 divided by number of equity shares given as 70,000. So that is 2.5. Next, finally, dividend payout ratio. We need to calculate a dividend payout ratio. The formula for the calculation of dividend payout ratio will be dividend per share divided by earnings per share. Earnings per share, that is 2.5. So dividend per share dividend per share, so the value of dividend is given as 15%, so we need to provide on 7 lakh into 15%, that is equal to 1,05,000. So 1,05,000 divided by number of equity shares 70,000. So dividend per share, that will be rupee 1.5. So applying the formula dividend per share divided by earnings per share. So dividend payout ratio is equal to dividend per share 1.5 divided by earnings per share 2.5. So that will be 0.60. So this is how dividend payout ratio that has to be calculated. So these are various kinds of ratios that must be calculated. Thank you.